Hello everybody, welcome to the Fundamental Analysis webinar this afternoon with AvaTrade. My name is Troy, I'll be leading the session. As always, keep in mind that all trades have risk. No one trade is guaranteed to profit. I think we all understand that. The idea is to manage your risk in a way that makes sense as you go after the profits that you hope to make. And so whether you're using stop losses, hedge positions, or maybe a feature like AvaProtect, which is available on our web trader and AvaTrade Go mobile app. There are different combinations of ways, obviously, to manage risk. We'll go over the AvaTrade feature, the AvaProtect feature that's on the web trader and AvaTrade Go here in a little while. But in some way, it makes sense. Manage your risk in a way that's proper for your risk tolerance. Now, as we go over ideas and strategies today, keep in mind that it's from an educational perspective and not meant to be taken as financial advisement. Now, what is fundamental analysis? I know we have a mix of new traders and experienced traders in the webinar, but we probably should go over just the basics real quick before we get on the charts. What is fundamental analysis? Basically, it's looking at the news. It's looking at the headlines and the economic reports and understanding which way you feel the wind is blowing in terms of different instruments that you want to trade on. So, for instance, if there were, earnings reports that came out that were positive for a certain company, like a little while back, Apple and Amazon and some different companies had nice numbers that came out better than expected. Well, that type of fundamental news obviously would give you a bias in terms of what direction you might want to trade on those particular stocks. And so the same is true for any instrument you're trading on. It probably makes sense to understand what fundamentally is happening. Were there good jobs numbers that came out, in a certain country? Were there GDP numbers that maybe came out that might affect a certain currency, etc. So there are different types of fundamental news. I kind of gave some examples just now of what we might call regular economic events, where we know when the GDP numbers are coming. We know when the factory production numbers are coming out of Great Britain or out of the US or out of Australia, etc. And so those types of economic events we might call regular economic events because they occur at regular intervals, at scheduled times, on exact days. And so those are easy to account for in terms of timing and scope. You still don't know for sure what the results of those numbers will be when they're released, but at least you know when they'll be released and what they'll be about. The other type of fundamental analysis is when we're looking at extraordinary economic events, like the virus numbers, the virus totals that are occurring in a certain place might spike up or spike down. And that headline could come out at any time. Or news about Brexit that maybe is unexpected. That was a big one over the past year or two. All of those headlines that were breaking, and you just didn't know what the headline would be or when it would be. And the same is true about the coronavirus now and U.S. policy with the new administration. What's going to happen next? They canceled the Keystone Pipeline, not allowing new permits to drill on federal lands for fossil fuels, etc. So as these headlines come out and oil prices spike, or whatever the case may be, depending on the headlines, that's the type of extraordinary news you can account for with pending orders, usually, even if you don't know what the news will be or when it will be. Okay, and we'll talk about those strategies of how to account for news that hasn't happened yet, and also how to account for news that has happened or that you know when it will happen. So we'll go through these ideas here in just a moment as we go through some fundamental news that has occurred and will be occurring today, both types of fundamental news. If you have any questions as we go along, please use the chat box to give input or ask questions. I'm happy to share information as well. I think there's someone having a problem with their audio. Let me just type real quick. Peter's having a problem with his audio on his side. Declan, maybe not. Declan's suggesting now that Trump is out of office and Biden is in, that maybe the markets will be more stable. In some regards, I'd say yes, and in other regards, maybe no, because at least you knew what Trump stood for in terms of low taxes, low regulations. That helped buoy the stock market and energy in general. And now the opposite maybe is true, with more regulations being thrown on the fossil fuel industry. A lot of changes occurring with policy in the US now because it's a new administration. So whether for good or for bad, certainly new administrations bring new policies and changes. And so I think a lot of investors are still a little weary about what exactly will the new administration in the US do in terms of policies. And so that's, some of that is up in the air still, but I get what you're saying. Trump could be a bit erratic sometimes. I think more with his tweets than with his policy. His policies were pretty predictable, but we'll see. Only time will tell with the new administration what happens. All right, so let's take a look then at a couple things before we get on the charts. Now, one thing in each webinar I like to make sure, because I know we have repeating attendees, so some of this could get repetitive, but we don't spend too much time on this. I want to make sure anyone who's new, that you understand what's available with our web trader platform and our AvaTrade Go, because it helps with your fundamental analysis and your technical analysis. And so it fits with what we're talking about. Then we'll get into some headlines and onto the live charts to look for some opportunities. In terms of our trading platforms, if you look here and go to AvaTrade Go, this is our mobile app that we've built ourselves, and it has some advanced features, especially in the order window. I spoke about Ava Protect. Gold, silver, and FX pairings allow you to protect your trades for a small premium cost. The bigger the trade, the larger the premium cost, but the premium is relatively small compared to sometimes if you put a stop loss, you'll see what your exposure is. And sometimes that's a lot bigger exposure than you'd want, and maybe the protection makes sense for a certain time period. If you expect a movement within a certain 2 hours, 4 hours, 1 day, 2 days, etc. And so you can put protection for different time periods. And the take profit and stop loss, when you program them on the app, it calculates your exposure in your account currency and your potential profit for you. So it acts as a trade calculator as well. If you log in from our main website, you'll be in our web trader, which acts just like the mobile app. Okay, you can actually log into the web trader from our website with your mobile device, and you wouldn't even need the app, because our web trader will work on your mobile as well. So if you log in here, you should see this platform. Okay, it trades right on top of your Mt4 and Mt5 accounts, and you can switch between. If you have an Mt4 and an Mt5 account or multiple accounts with us, you can switch between them here. All of your accounts would be here. You could switch to your demo, or it would have multiple live accounts listed. If you have more than one, you can switch between them right here, and it trades right on top of your Mt4 and Mt5 accounts. So it's just a different user interface. Now, what I wanted to show you in terms of that risk management is, if we do a search here, and let's bring up something that we know Ava Protect is available on, like gold. And so you see how easy it is to find an instrument on this platform compared to the Mt4 and Mt5 platforms, which don't have a search function like this. You can bring up your instrument right away. And so if I'm buying or selling on gold, let's say, maybe I want to do, I don't know, 20 ounces. Maybe I think, okay, that's a good trade size, 20 ounces. And it tells you how many ounces and what the lot size is. And here's my margin impact. So it's calculating my margin needs before I place the trade. So it knows my leverage. It calculates to open this amount of ounces of gold. Here's how much will go to margin. So I know right away that it's that amount going to margin, leaving the rest of my equity as free margin. Let's see, I see a question. The difference between MT4 and MT5 is very little difference. It is a different programming language is the biggest difference. So the functionality of MetaTrader 4 and MetaTrader 5 are 99.9% the same. If you were using a custom indicator or a trading robot that was programmed for the MetaTrader 4 platform, it will not function on MetaTrader 5 because it's a different programming language for the MT5 compared to the MT4. So for the average use, there's almost no difference between MT4 and MT5. For more advanced stuff, MT5 is a different programming language, and so you would have to reprogram robots and that sort of thing to have it function on the MT5 from the MT4 or vice versa. Adawaya, I'm reading your question. What do you mean how to enter the present place from your dashboard? I'm not sure what you mean. Maybe rephrase your question. So if you mean how to get to the order window, all I did was click on buy or sell, and it brought up the order window. And by the way, I can change my mind. I can switch to sell once the order window is open, whichever I choose to do. Now, if I then have a certain trade size in mind, let's say 20 ounces of gold for whatever reason is what I think I want to do. Then I say, okay, my take profit, maybe I think gold will go up to 1950. It was there not that long ago. So maybe I think when the US passes stimulus that the inflation of the USD will cause gold to go up as the USD maybe weakens from more stimulus being printed. So if that's my working theory, gold is an anti-inflation safe haven. Maybe people will buy into gold, driving it back up towards 2000 if another stimulus passes in the US. So if that's my working fundamental theory, okay, if that's my fundamental theory, that stimulus could drive up gold and weaken the USD, then maybe I'm preparing to buy on gold to 1950. And I say, wow, look at that potential profit, almost $2,200. That's a nice profit. It's calculating it for me. But before I jump into that trade, maybe I ought to check my risk. So, if I'm starting at the current price and I say, okay, I've seen gold drop down to 1800 not that long ago. So maybe I need my stop loss below 1800, maybe 1795. I say stop loss. And then I look and I say, oh, I'm risking almost, over $900. That's more than 50% of my balance. Now I might rethink and say, okay, I like the potential profit, but boy, I don't want to risk $900 of my 1600. That's over 50% risk. So I know my exact risk, my exposure when I put in my stop loss price of the risk to that price. Okay, give or take if it closes slightly different than that price. But now I can say, okay, maybe I lower my trade size to 10 ounces. And now I can say, okay, I'm only risking 450 now, 452. And my potential profit's still well over 1,000. So maybe I say, okay, I'm okay with that, or whatever risk I'm comfortable with, but at least I'm fully informed here. I've got the fundamentals on my side, maybe. This is a fundamental analysis webinar, so it is typically fundamentally true. If large stimulus is handed out, that tends to weaken the currency. That leads to potential inflation fears. And so then people buy into gold when there's inflation fears. So if that's my working theory, then hey, maybe I want to buy, put my stop loss below 1800, put my take profit at 1950, and away I go. And now I know my risk, my potential profit, everything. Maybe I think, wow, they might pass stimulus in the next couple days. Now, I don't know that they will because they're busy with this second impeachment process of Trump in the US. But let's say if you thought they were going to pass the stimulus in the next couple days, you could say, you know what, instead of putting a stop loss, I'll put AvaProtect. And I can protect for 1 hour, 3 hours, 6, 1 day, 2 days. Look, only $92 cost for 2 days protection. My stop loss was all the way down to 400 and something I was risking. So for the next 2 days, I can pay a premium of 92.67, and no matter how much gold goes the wrong way, I don't lose any more than that in those 2 days. And if it closes 2,000 in the negative or 1,000 in the negative or whatever it is, the protection pays me that money back when the protection expires. And then I can let the trade keep running. Maybe by then they pass the stimulus, right? My timing was off a little. So this gives you some flexibility in terms of your risk management to be able to stay with the trade, no matter how far it might swing the wrong way before it goes the right way, as long as it's within the covered time period, right? You can always add your stop loss when the protection ends. Okay, so very nice feature to manage risk as well. Now, fundamentally, what can we use this platform? How can we use it for fundamental analysis? Very simple. All live accounts. If you're working on a demo account, I would say at least put the minimum deposit in so you can have a live account. Then you can use Trading Central. This feature here on Trading Central has something called Market Buzz that's available on all live accounts. And you'll see the Market Buzz brings you fundamental news in kind of a pictogram. The ones with the biggest bubbles have the most trending news right now. Microsoft, Twitter, Tesla, Amazon, all these tech stocks are trending the most. And they're moving a lot on the charts because of it. So, if we want to find out, well, what exactly is going on with Amazon right now? Okay, fine. Click on Amazon. And you see the articles. This one came in just 34 minutes ago. What's the fundamental news on Amazon right now? Click, expand the article, and there it is. There's the latest news, okay? Their holdings were boosted by Jag Capital Management, LLC. You can read the article and understand. That sounds like good news for Amazon. You read the article, and within 5 minutes, you might know something more fundamentally about whether you want to buy or sell on Amazon, and it just came out, this news. So it's right there at your fingertips, the fundamental news for all of these instruments, and the ones that are trending most are the biggest bubbles in this pictogram. Okay? So that's a very nice feature. Ali, good question. AvaProtect is available on gold, silver, and FX pairings only. Soon, I'm told, sometime in the first quarter this year, I believe, you'll start to see stocks and indices being available with AvaProtect. Okay, good question. No, Marius, good question. When you're using AvaProtect, the trade does not close automatically just because the protection ends. So let me give you a couple scenarios if I was using AvaProtect. Let's say that proposed trade on gold, if I had bought on gold, and let's say it plunged the wrong way because they start to have problems with the stimulus negotiation, which could happen. And then maybe the USD strengthens instead of weakening because there's fears that they're not going to pass the stimulus. And so there's less inflation fear, so gold drops, goes the wrong way on me, but I have the protection. And gold drops, I don't know, down to 1800 or even lower. No matter how far it goes, I'm covered, right? There are a couple different ways that the protection would end, and you would receive a payment from the protection if it was in the negative, if the trade was in the negative. One would be if you got stopped out. If the trade went so far the wrong way, you couldn't cover any more negative movement, and you get a stop out. Whatever the negative is, when that trade closed, if it closed during the covered time period, you would get the full payment for the negative floating. You could reopen them from that better price, and you'd only be down the premium. Other example would be, let's say it drops to a price and it's floating above 1800, let's say, and you say, wow, now I really think it'll go up. And you say, my coverage isn't over yet, but I'd like to collect on the negative floating from the protection before it goes back up. And I'll close the trade manually, even though there's time left on my protected time period. I'll close it manually, take the payment for the negative floating, then reopen. Now it only needs to go up the distance of what I paid for the premium, and I'm in overall profit. Whereas had I waited and it went all the way back up into the positive before my protection ended, well, then I wouldn't get any payment from the protection if it's back in the positive already. So there are different ways to use that protection. But in any event, if the protection ends, whether it expires and the trade is still open, or if you manually close the trade, then obviously the trade is closed, right? So if the protection ends and the trade is still running. It hasn't been stopped out. You haven't manually closed it, and the time period of the protection expires. Any negative floating is added to your account, but the trade keeps running. It would keep running with the same negative floating showing, but you would have received a payment for whatever the negative floating was at the moment the protection expired. Okay? Good question. And there are different ways to strategize on how to use that particular feature. All right, so let's quickly look at some headlines. What's come out? Global stocks nudge higher, sustained by bottomless stimulus. They're talking about bottomless US stimulus. I don't know, something like 4 trillion. That's trillion with a T. It's unheard of. We used to talk in millions, then billions. Now we're talking in trillions. It's maybe hard for the average person to understand just how much money that is, $1 trillion, and to have 4 trillion handed out already in just the US stimulus packages, and now they're talking about another 2 trillion. That's why the markets, even with economies being shut down, that's why the indices and the stocks have been climbing, because boy, they love free money. They love the fact that the economy is being injected with all this free money and low interest rates. It really helps business. So the stocks, that's what this headline is telling you. Global stocks nudge higher, sustained by bottomless stimulus. They're talking about another potential 2 trillion in US stimulus, okay? And other areas around the world have been doing stimulus as well and keeping interest rates very low. So it'll be very interesting to see what they end up passing in the US. What do you think will happen to the markets if all of a sudden they say, no, it won't be 2 trillion, we're only going to pass 1 trillion? I say only, like 1 trillion is small, but you know, that very well, even though stimulus is passed, if it's less than expected, could cause the markets to pull back down, could cause gold to pull back down, oil to pull down, stocks to pull down if the stimulus ends up being smaller than expected, right? Or if it comes in bigger than expected, you could see another surge up. So these are the types of headlines we talked about. We don't know for sure what they'll be. It's a type of fundamental news that's an extraordinary type thing. So we're waiting for more headlines on that, and we can prepare with our trading strategies in either direction. Eurozone growth in 2021 to rebound less than expected. That's interesting. Okay, that's kind of a negative headline. So if it wasn't for US stimulus package creating bullishness, maybe a headline like that could cause quite a reversal to say, oh, growth is not going to be as good in 2021 as expected. That's what this headline's saying. So it's a situation where much of the optimism in the markets has been buoyed by tech stocks that did well during the pandemic, Amazon, others that do online sales, and by stimulus. And then if we look at the guts of many of the economies, we see growth is really not expected to be that great. Okay, so bigger picture could be maybe a pullback in the market, whereas short term could be a surge in the market with more stimulus being passed. This is the fundamental picture we're seeing. Right now, we see the volatility index is flat. Okay, the VIX volatility index sometimes is referred to as the fear index. Okay, I'd like to take a look at that before I trade on anything. What's the fear level today? What's happening? It's pretty flat. You know, not up or down any more than 1%. It means that things are pretty non-volatile in terms of fear on the market when we look at the volatility index. It's down slightly, and the futures are green slightly. Okay, so futures are green slightly, volatility is down slightly. So that tells you, all right, maybe the markets will bounce up some, but probably not in a huge way right now based on this picture. But what could move the markets later today? I think this is the bigger deal today. The bigger deal, Ali, no, AvaProtect is not available on indices yet, but this first quarter, I'm told it very well may be. Okay, so keep an eye out for that in the coming months. All right, so what's happening later today? Because the headlines so far are kind of mundane. You know, okay, stimulus is buoying the economy. The markets are up a bit because of expected stimulus. We already know that, right? It's kind of built into the movements already. What could happen to change the situation fundamentally are these announcements that are planned for later today. We see the 3-star announcements, and you can find these types of announcements within the web trader. There's an economic schedule you can click on. You can find it on Forex Factory, on investing.com, etc. You know, on Forex Factory, they put bullheads instead of stars. It's the same idea. 3 stars or 3 bullheads, it means it's a big deal. If it's a 1-star, like this continuing jobless claims, not as big of a deal to the markets. So this 3-star announcement, initial jobless claims, that's at 8:30 a.m. New York time. So adjust to your time zone to know what time it'll be your time. I've got New York time showing here, 8:30 a.m. Okay, add 5 hours for GMT time, etc. So this is coming later today. Large announcement. Look, there's another one just an hour and a half after that. 3-star announcement, Fed monetary policy report. That's a big one. Monetary policy report. They're going to talk about their policy for the coming quarter in that report. And so what if they come out and say they're looking to increase interest rates soon? Wow, you can see the USD strengthen like crazy and gold pull down. What if they say in that report they're going to keep 0 interest rate for the foreseeable future? Probably USD weakens more and gold goes up, right? That would be the usual effect. So we don't know for sure what they're going to say in that report. We can have an inclination of what we think they might say, which is, you know, COVID is still there. The economies have been hit hard. Probably they're going to look to support the economy with low interest rates, bond buying, who knows? So maybe you expect that type of report and you could anticipate and take a guess now on a trade, or you can wait. And I'll show you some ways you can wait and just wait for the breakthrough move to get in on the wave, whichever way it goes when the report comes out. And then we've got US federal budget, another 3-star announcement. So big announcements coming out of the US, 1, 2, 3, 3-star announcements. We've also got announcements coming out of Great Britain tomorrow. If we go to tomorrow's announcements, early in the day tomorrow, we see that's 2 a.m. New York time, right? So add 5 hours, that's 7 in the morning GMT time. GDP numbers coming out year over year, GDP numbers quarter over quarter, manufacturing production, monthly GDP, 3-month to 3-month change, etc. Large 3-star announcements, 1, 2, 3, 4 of them, and some 2-star announcements to go along with them. That's early in the day tomorrow. So what you'll then see is probably really big volatility on the pound tomorrow morning, right? Tomorrow morning GMT time, 2 in the morning New York time. So what we're looking at then is huge potential movement on USD pairings today because of those 3-star announcements, and tomorrow on GDP pairings, GBP pairings, because of GDP numbers. Okay, so let's take a look at the charts then, because I think that's the area to focus is on these announcements we know for sure are coming, and we can prepare for the news that we don't know when it will come about stimulus, and that may be on the major indices. The US indices would be where we would look. Declan, you're asking if I'm in New York. No, I am not, but I'm showing New York time because that's where the official trading day hours come from for most all brokers, including AvaTrade. So for example, when we say if you carry a trade past the end of day, past the end of the trading day, then you can have a small amount of interest to carry a trade overnight. We're talking about 5 p.m. New York time is end of trading day. Then everybody else determine what time that is, depending on where you are in the world. So 5 p.m. New York time is the official close of the trading day for us. So I'm always referring, or many times referring to New York time, and that's how I have this set here. Okay, but you can change the setting up here. You see the GMT? I'm on GMT -5. I could switch to some other GMT time anywhere in the world, and it'll show me in that time frame. Okay. Okay, Declan. I'm glad you're in Ireland. We're headquartered in Ireland, so that's nice. And you can set your time frame to Ireland here, okay? Wherever you would like. All right, so let's get on the charts then. We can see that we expect potential large movements today on USD pairings, by tomorrow morning on GBP pairings, and potential movement on any unexpected headlines about stimulus on the major indices around the world. Okay, and specifically probably the US indices the strongest. So let's first start with what we don't know. Let's start with the indices. And by the way, we changed the name on some of the indices. So if you're clicking on US 500 and it doesn't work, make sure you reload, right click over the market watch and click on show all, and make sure you're using the US 500, the US 30, underscore, I should say, not dash, it's an underscore. And the Nasdaq 100 has changed to US underscore tech 100. That was so we're in line with our feed providers. That's why those names changed. They're the same instruments. There's nothing different about them. Okay, perfect, Declan. All right, so let's take a look then at maybe the Nasdaq. Okay, we see on 30-minute candles a huge drop off and then a recovery. Okay, earlier in the week, big drop off and then a recovery back up. If we look at 1 hour, 4 hour, one day, I'm looking for resistance up here. That's an all-time high up here, folks. So I can go to 1 week, 1 month. There's nothing higher than this current high point here. So we're near all-time highs right now. So if I'm looking for a higher resistance, there just isn't one, doesn't exist. So then I look at the small candles and I say, okay, this is the all-time high up here. That's our all-time high. If I want to have a pending order to sell, that might be a good spot to put one, right? Maybe there'll be some excitement as they talk about stimulus, and then as the markets get to this all-time high, that's a spot. Look what happened last time. Look at this drop. Look at the plunge from that all-time high. So I could say pending order here, just below the all-time high, could make sense to sell. Okay, that's just a technical entry point. Also based on the fact that the way things tend to go in Washington is as soon as they think they have progress, then something happens to reverse the idea. So it could be an opportunistic spot to try and sell, to short the market on some of these indices. So that could be a spot that makes sense. Okay, around 13,757 is where I drew this line, just below the all-time high. And we see it reached an all-time high here, came down. When it got close to that all-time high, look at the plunge it took. So a lot of traders know that this occurred, this plunge. And so if this gets near that spot again, even if it's going to eventually break this high point and go higher, which eventually it will, right? Even if it's going to break through and go higher, likely as it reaches this point, it'll have at least a temporary pullback. No guarantee, but many times that's the way it happens, okay? Until they know for sure that this stimulus has passed. So if I wanted to do a pending sell stop then, or sell limit, pending order, sell limit sells from a higher point than it is now, okay? So I could program to sell from 13,755, something like that. 13,755. Okay. Stop loss could be just above that at 13,780 or somewhere thereabouts. Depends how patient you'd want to be. 13,000, maybe even 800. Take profit could be at this support level down here. It was just down here earlier in the week. So maybe 13,625. Just as an example. So there's my pending order. If I'm lucky enough for this to catch this high point right near the last spot, when it got there, it plunged. So then if it hits here again and comes down, my take profit is here, which is at this little support level here. Support, support, support. It might pause if it starts dropping. it might pause when it reaches this support level. If I expect a bigger plunge, well, then maybe I put my stop loss down here at this low point that it came all the way down to. You're more likely to hit your take profit if you're at the first support level. You would be expecting, if you put your stop loss down or your take profit down here, you're expecting a bigger movement then. Ali, if you've been with AvaTrade for, let's say, more than 6 months or a year, we built the web trader in the past year it was launched. So you might have, for those of you who have been with AvaTrade for years, you need to ask support or your account manager to add the web trader to your account. Then when you log in from our main website, you'll see the web trader platform. Okay? Anyone who's newer in the past, let's say 6 months, should have the web trader automatically on the account. Okay? All right, so that's a situation that is technical based, but also based on the fact that they have not passed stimulus yet. And so perhaps the Nasdaq, if it reaches this resistance point before they pass more stimulus, you could see it pull back down again. There's a likelihood that that could happen. Now, what if they do pass this huge stimulus? What do you think happens to this resistance level? It probably breaks, right? In which case, we better look at like 4-hour candles, and maybe what kind of pending order buys from a higher point? If they pass stimulus and it breaks the resistance, you probably want to buy if it breaks the resistance, because there could be continued momentum. We looked at the 1-week candles. There's no resistance above this level. If there's enough momentum to break this high point, you might have a buy stop pending order waiting to buy from up here. Why would you buy from a higher point? Because it broke the resistance, confirming an uptrend. That's the idea. So why would we expect that it might break the resistance? We said they're negotiating this big stimulus package. If it passes, boy, the markets could go surging up. So at the same time I'm selling from just below the resistance, I can also acknowledge that that could be wrong. It could break through if the right headline breaks fundamentally. So then maybe I'm also going to prepare a buy stop pending order, because the fundamental situation tells me, hey, there could be news that could break that resistance level. So buy stop. At the same spot, I have my stop loss on my sell position. I would then buy if it hits 13,800. The same reason I get out of my sell, that's the same reason I would buy then. It broke the resistance. So I give up on my sell and I buy. And so then your stop loss would be down below the resistance, maybe 13,775 or something like that. And my take profit, maybe there's no resistance up there. So a nice round number, maybe 14,000. Amazing to think that the Nasdaq could hit 14,000. And it could in pretty short order. So now I'm prepared for the current news situation. They're bickering about things in Washington still. So if I reach the all-time high, I want to sell. And I'm also prepared for the possibility that they reach a deal and it breaks the resistance. Great, I'm in on a buy then. Okay, prepared for extraordinary fundamental news that I don't know when it might happen, but I have my trip line in the market now with my buy stop and my sell limit just waiting. Good question. Adadayo, all of the webinars are recorded, including this one. You'll find it on our YouTube channel. So go to YouTube, in the search, put AvaTrade channel. You'll find it. There's a section for English webinars, and you'll find all of the webinars there. Not just mine, but also Naeem Aslam does webinars as well. He does a little headlights for the day each morning. He does advanced webinars also, longer webinars. So you'll find all kinds of stuff on our YouTube channel, including these webinars. By the next business day, this one, so by tomorrow, it should be uploaded. All right, so that's a setup maybe for Nasdaq, the US Tech 100. You could do the same concept on the US 30. You could do the same concept on the US 500. You could do the same concept on the DAX. Okay. Also, if it gets to the all-time high or to a high spot that you think it should pull back on, you could have a sell limit and also a buy stop above the resistance. Same as we just did on the Nasdaq. Okay, same type of setup. All right, so we talked about the GBP and the USD pairings. So what we could do is pair those together, right? GBP USD has huge potential for movement now as today's announcements come in out of the US and tomorrow morning as the GBP major announcements come in. So this pairing could have huge movement. Now, we don't know what those announcements will be, but we certainly can prepare for the movements to occur. So for example, if I'm on 30-minute candles, if I get a movement that comes down and breaks this support level here. Yeah, you see that's a support level, this level here. It was resistance and now it's support and it's above that price. So if the movement breaks below this price, probably those announcements today were good for the USD, right? If the US pulls the pound below this support level, then those announcements that are coming in just a few hours time, the major announcements out of the US, then they must have been good for strengthening the USD. So you could have a pending sell stop ready to go down here at this price, somewhere around 137.90, 1.3790. If it hits 1.3790, then it broke the support, in which case you must assume that there must have been good news on those announcements out of the US for the USD, for it to strengthen and pull the pound below the support level. So again, we're waiting for a breakthrough of a price level to confirm momentum in the direction that then you trade, with a sell stop pending order ready to go down here. So if I wanted to do that, that's what we call a sell stop. Switch to pending, go to sell stop, and I put the price 1.3790. That's my entry. My stop loss then would be back above there, someplace, 1.3808 maybe, depending how far I want my stop loss. $3.805, that gives me 15 pips to my stop loss. Take profit. If it's big news, it could plunge. And so you could go any distance that makes sense to you, maybe 1.3760 as this example. Depends whether you're scalping or in for the longer move. Because there's new news coming tomorrow morning, you might be in it for more of a short term. Okay, so there's my pending order. Waiting for a broken support to hit this green line. That would trigger a sell position, taking profit at the next support level here. You see this is support, support, support. So my take profit could be right above that support level. Okay, my potential profit is about double what I'm risking. My risk back up above the broken support. If it triggers my sell, it would have to go back above that price level for me to say, okay, it was a false breakthrough. Otherwise, I have double the potential profit, what I'm risking. Okay, now, but what if the news is bad for the USD? What kind of pending order can we set up above this resistance? We see resistance, resistance. If the price comes up here and breaks that resistance, then we must think the news was bad on those major announcements, either on the pound or the USD announcements. Bad for the USD, good for the pound, depending which announcements we're talking about. Then maybe you have a buy stop pending order up here. So sell stop here, buy stop here. So we know exactly which instruments will likely have big movements. We just don't know which direction. So we're setting up in both possible directions for these major announcements, because unless you're Nostradamus, right, we don't know if those announcements will be good or bad. So we're preparing in either direction for better than expected news or worse than expected news on the USD announcements today and the GBP announcements tomorrow. So a buy stop pending order, same thing, pick a price up here and prepare it. So this is what 1.3870 would be clear of all of this resistance. And you'd set it up just exactly like we did the sell. Okay, but in the opposite direction. All right, Declan, if you need help with that MT5, just let me know. If you're in my office, you can email me directly, and we can walk through it. Okay, so that's the GBP setup. I like the idea of a sell stop below this support level on the 1-hour candles or the 30-minute candles, and a buy stop above the resistance level, so that if it breaks through one way or the other, we know that those announcements today were either really good or really bad for the USD, or the announcements tomorrow morning. And you may need to adjust these levels for tomorrow morning for those announcements. The US announcements might break one of these levels and you're already trading. Then you look and see, okay, before the announcements tomorrow morning, reset the same strategy at whatever new price level it's at. You might have already profited on one of these in one direction or the other after the US announcements today. So then you could set up prior to the announcements tomorrow as well. Okay, so that fits the fundamental news that's upcoming. Okay, so we've got some trades prepared then for what we know already with the US Tech 100. And we've got trades prepared for what we don't know, but what we know is coming in terms of the US announcements, GBP announcements. Okay, I think this is a good place to stop. If anyone has any questions before we end things, let me know. Okay, so thank you for attending. Get your trades going, maybe on gold, major indices, oil. All of them could be affected with any announcements about stimulus in the coming day or two. And obviously take a look at GBP pairings, whether it's GBP USD, GBP JPY, USD JPY, etc. You'll likely see really big movements on the USD pairings today and the GBP pairings tomorrow. All right, everybody. Thanks for attending. We'll be back at it Tuesday at 6 p.m. GMT time.